Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Mark Marex, who's a specialist with Nasdaq's Index Research and Product Development team. We're going to take a look at May performance and some higher level macro views on the market itself. Mark, it's great to have you with us. Thanks so much for joining.
Great to be here. Thanks for having me.
All right, Mark, let's go through a couple of slides here. We're looking at some of the performance with the different indexes, Nasdaq featured and also Nasdaq global indexes. We'll start with featured. What are some of the themes that you're looking at here?
Well, we talk about a lot about the performance of the Nasdaq 100, and while it certainly did well in May and continues to be one of the best performers annually, you can look at the performance of other indexes like the Nasdaq 100 equal weighted, the composite, and also the Q50, all of which are more heavily weighted towards the mid cap and smaller cap space. And especially in the case of the Q50, which is essentially doubling the performance of the Nasdaq 100 in May. I think what it paints is the rally of the market that really was started and led over the last couple months by the large and mega caps has started to broaden in May recently, and that's consistent with macroeconomic consensus getting a little bit stronger in terms of a durable recovery. And it's really one of the most interesting indexes, I think, that we track at NASDAQ. It's essentially the next 50 largest companies that would be eligible to join the NASDAQ 100 and includes a lot of up-and-coming high-performing, high-innovation growth companies.
All right, in your next chart over here, you're taking a look at the global index family. What have you learned from taking a look at the performance here and what that means on a bigger level?
Right, so here we're just kind of zooming out a little bit more even. You can see that our NASDAQ global benchmark, which is just a benchmark of all the most investable countries in the world, market cap weighted, is up 4.4% for the month. Just below that, you can see the split between developed and emerging. So obviously developed has been driving most of the performance here, with emerging markets still not really seeing the strongest of recoveries yet on a year-to-date basis or on a monthly basis. If you move further down the line, you can even see, regionally how that performance has been broken out. APAC ex Japan is also flat, whereas Europe is actually doing pretty much almost as well as the large caps in the U.S., right? 4.5% for Europe, 4.8% for U.S. large caps. And then in the final two rows at the bottom, though, you can see that U.S. performance is starting to, like I said, broaden out a little bit from the initial leaders in the large and mega cap space into the mid and small caps. And that should be, continue to be bullish for those who think that the economy is on a more level footing now.
So Mark, what can we discern from this? We're seeing that the larger technology and biotech indexes are doing well. We're seeing that U.S. indexes continue to outperform. Is that just a function of where else are you going to put your money? Stocks are yielding more than fixed income are at this point, and there still appears to be growth in U.S. markets right now?
Yeah, I think it doesn't change the investment case for the leaders of the market historically, even before the crash and the recovery. I think from a fundamentals perspective, we've talked a little bit here in the past about how strongly positioned the largest firms in the U.S., especially in the tech space, are to continue to grow and to put in solid performance with their earnings, with their dividend growth. You have to, in this type of market, I think, be really attentive to where the pockets of weakness are persisting. And that, even though we've seen recoveries in commodities, that's still, an area that is, I think, more sensitive to underlying demand pressures, whereas, the other parts of the economy, the new economy that are centered more around healthcare, more around tech, more around consumer, are certainly, leading, continue to lead. And I think what's happening now is that is just starting to filter down from the upper, tiers of the market cap spectrum down to the lower tiers.
All right, Mark, great. Thanks so much for the insight.
Thank you.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.